Hi everyone, this is Rick McDermott with Senior Solutions Group, and thank you for checking out this video. And if you haven't done so already and you would like to, please subscribe to our channel. And also, if you'd like to get alerts to new upcoming videos, go ahead and click on the bell icon as well. So we're going to talk about long-term care today. In my past and former life, I was a social worker in a long-term care facility and saw on a day-to-day basis people in crisis, people needing long-term care, families in disarray, trying to sort through all the tsunami of different things that were happening all at once with care needs and money issues, and trying to fund care and trying to figure out how to save mom's house and her nest egg, or trying to figure out how to keep as much normalcy as possible in a time of crisis. This is a big issue that is facing our nation as people are living longer, taking better care of themselves, and often because of that, they are having an increased need for long-term care. So in the state of Washington, Washington is the very first state to set up a mandatory long-term care. In this case, it's really a short-term care tax that anyone who is a W-2'd employee will have to pay starting in January of 2022. It's called the Washington Cares Fund. And a little bit about the Washington Cares Fund: due to the massive output of tax dollars for Medicaid spending, billions and billions of dollars, Washington State is the first state in the United States to develop a way to make long-term care affordable for all workers in the state as we age. This is right off the WashingtonState.gov, WaCaresFund.wa.gov website, and we'll have the link as well if you'd like to check out the link and read up on this on your own, which I encourage you to do. So it's a new fund. It's a pioneering fund enacted by the Washington State Legislature and signed by Governor Jay Inslee. Contributions will begin January of 2022. People who are working for an employer as an employee will pay 58 cents on every $100 that you earn. So as an example, if you make about $80,000 in income, your estimated tax will be right around a little under $500 for the year. Every employee contributes. Employers do not contribute to this. And if you are self-employed, you can opt in to the trust. Benefits will begin January of 2025. So each person who is eligible to receive a benefit can access services and support costing up to $36,500. So to put that in perspective, a nursing home, a skilled nursing facility in Yakima, Washington, where we live, in 1995, when I first started helping people plan for long-term care, cost roughly $35,000 to $40,000 a year. So these benefits starting 4 years from now will pay about what it cost for 1 year 30 years prior. So these nursing facilities and assisted care facilities are going to be paid at the Medicaid level, the state Medicaid reimbursement level, which is roughly 40 to 50 cents on the dollar. So these facilities are going to have to accept this lower reimbursement rate and are going to be expected to stay operating in business at a profit, which most of them, their profit margins are this thin. The regulations that these nursing homes have to follow are like the nuclear code. I mean, the manual is literally this thick. They get surveyed every year by the state of Washington to make sure they're in compliance. Every jot and tittle, every form must be filled out. A lot of these nurses spend more time pushing paper and filling out forms than they do with patients. So we wonder why a lot of these nursing facilities charge so much. Well, they have to pay an enormous staff to wade through all the papers and to make sure they're in compliance with state and federal regulations. So the cost of long-term care is enormous. The average length of stay in a long-term care facility is about 2.5 years. And the reason that they're enacting this is there's about a 6 in 10 chance if you make it to age 65 that you'll need long-term care. the crushing weight of the cost of long-term care is enormous. So whether this is a good law or not doesn't change the fact that something needs to be done. People need to plan for their future and not just rely on the government to step in and take care of all of this. So this is more of a Band-Aid approach. It is not going to pay for long-term care. It's going to pay for short-term care. But you have the option to opt out of this act if you so choose. So if you decide you want to opt out of the long-term care fund, you have until November 1st of 2021, and you must show that you have been not only enrolled, but actually approved in a long-term care insurance policy. So this is a good incentive for those of you who are considering long-term care insurance or on the fence. It's just another thing to consider if you feel like you need to take another look or a first look at long-term care insurance on your own. Because if you purchase this on your own, you will not have to pay the tax. And you can have benefits that are 5 or 6 or 10 times more than what this plan is offering. Because this plan is only going to offer $36,500. That's a $100 increment, so they'll pay out a maximum of 1 year of benefits. You must pay into the system to be totally vested in the plan for 10 years. And you must reside in the state of Washington. So those of you who are 62 and still working, you're not going to be vested, but you will pay into this tax. Those of you who are working, let's say you're 55 and you make it the full 10 years and you're 100% vested and you decide to retire to Arizona or even Idaho, you will have to move back to the state of Washington to collect on any benefits that you paid into. So this is only for existing Washington residents who must remain in Washington. If you are retired, you will not have to pay into the tax. This is only for people who are still working for an employer and have a W-2 form for their tax purposes. So a lot of people have a lot of questions about long-term care. There's a lot of unknowns about this act. I think they're going to try to fix this as they go. There's a lot of people that don't know about this. If you have friends that are working, if you are older and you have kids that are working that are making a good income, they definitely want to consider their options because they will be paying into this for the rest of their working years. The only way around this to opt out if you're an employee is to consider long-term care insurance. And if you do consider long-term care insurance, Washington State has a partnership program. So if you buy a policy that will pay for 3 to 5 years, the state of Washington will match dollar for dollar what the insurance company paid out. So if you run out of benefits after 3 to 5 years, you will be able to keep all the dollars that the insurance company paid out. So if the insurance company paid out $200,000 towards your care, you will not have to spend down to the last $2,000 in your nest egg to qualify for state Medicaid. You'll be able to keep an extra $200,000 and give that to your heirs when you pass away, for example, or to a charity. So I know this doesn't talk about every detail. If you want to learn more about it, check out this website. We have the link posted as well, and feel free to reach out to us at Senior Solutions Group. The number's on the screen as well. And we hope that this has been beneficial for you and you find this valuable. Thanks so much.